Hi everyone, good evening. My name is Marius. I'm one of the co-founders at PARADYSE.
Marcus, the other co-founder of PARADYSE.
We're just going to wait maybe 1 or 2 minutes for the rest of the people to join. So stand by and we'll get started very soon.
Hi, Manfred. Good to see you here.
Hi, John. Hi, Michaela. Hi, Raf. Hi, Stan. Sudesh, very nice to see you guys. We'll give it maybe another minute and then we'll get started. Mute for a second. All right, everyone, then let's get started. So great to have you all here. Tonight is not a generic property pitch. We're going to show you how Bali ownership actually works, what to watch out for, and we'll give you a real life example of how to get started and what the financials look like. So the webinar is about how to own a Bali home without paying for more than you'll actually use. Just a quick disclaimer, this is not financial advice. Obviously, get your own financial, tax, legal advice before you make investments abroad, but it can set a very strong direction for your investments in this region. Today, we will cover 5 sections, broadly speaking. We want to talk about why Bali is right now one of the hottest property markets globally, how to own securely in Bali. Then we'll go into 3 ways to invest in Bali. We'll touch on the traditional ways of ownership, but we also want to present co-ownership, which is one of the main purposes behind why we founded PARADYSE Homes. We will then discuss financials and return potentials. There's a very specific property we want to showcase today, which is one of our own developments, the 9, and we'll explain the numbers in quite a bit of detail. And then should you choose to go forward with us, we'll explain how to get started investing either as a full owner or as a co-owner. Great. There is a Q&A tab here in this webinar. So as you go through the webinar and you have questions that come up, please feel free to drop them in the Q&A tab. At the end of every one of those sections, we will stop to take questions. I would love to start and kick off with our first poll. We're just interested, what describes your Bali property interest best? So you should see a poll coming up. Let us know by voting. Okay, perfect. So this is a very typical kind of result that we're seeing. We see about half focused purely on investment of you guys, and then half looking for both investment and lifestyle. And this is exactly why Marcus and I have built PARADYSE, to basically enable both these use cases in one go. Okay, now we had one final vote. Investment is like the main priority for our customers here tonight. And that's also what a good portion of the webinar will focus on. What is it that I can actually expect in terms of returns? Great. So let's keep moving then. So just to frame the opportunity of Bali and why we think it's the hottest market, one of the hottest markets globally right now. So Bali always had the foundation as a global travel destination. It always had this geographic magic, ocean views, rice terraces, volcanoes, world's best surf beaches, all within a 45-minute drive of each other. And you had this rare combination of both beauty but also modern infrastructure at a low price point that just made sense for tourism. What has really changed in the past 5 years is a convergence of global capital, remote work infrastructure, and institutional investment that arrived simultaneously. And these are not tourism trends anymore. We're talking now about permanent structural shifts that basically repriced Bali as a global asset class for second homes. And so that is, for example, you can see that in the lifestyle ecosystem that has established itself here. We now count over 600 world-class restaurants, more than 50 beach clubs, and 300 wellness studios such as yoga, Pilates, recovery, you name it, we have it. Even like hair and scalp studios, all of that stuff is here. And that creates a year-round appeal right now that supports the demand beyond peak seasons. People come for that. There's also a permanent resident economy being established, which Marcus and I are part of. There are about 200,000 estimated long-term stay international residents who live in Bali right now. And so demand is increasingly driven not only by just tourists, but also between the peaks smoothed out by residents. And design and architecture have really reached a global level. Bali is now recognized for a very specific design style. You have this like indoor-outdoor living that just flows freely, and design quality now drives buyer demand more than ever on top of just location. Finally, Bali is becoming what we call a global citizen cluster. You have a strong base of founders, remote professionals, retirees, people who want to spend part of their time here in Bali. And that is being supported by infrastructure such as international schools that have been built and world-class hospitals that support the trend. So we can also see this narrative play out in the tourism demand. So if we just look at Bali tourist arrivals, we just closed out 2025 on 17.9 million visitors. This is a record, up from 16.4 the year before. And the forecast for 2026 is to hit 19 million visitors. All the way through 2030, it's forecasted to grow between 5 and 10% per annum, and we've seen that historically as well, with the exception of COVID. What's interesting is that if we look at the composition of who's arriving today, there's a very clear absence of China. So pre-COVID, China was contributing almost 1.5 million tourists. Right now, 850K of those are still missing. So there's almost 1 million in potential just left from China coming back to pre-COVID levels. And then the Bali North Airport, which is underway, will provide additional capacity for tourist arrivals of up to 30 million arrivals by 2035. So we have a lot of tailwinds to actually bring more growth to the island. And this demand is also clearly reflected in short-term rental prices. If we look at AirDNA, which is Airbnb's database, we can see benchmarks here for well-managed two-bedroom listings in Bali's hottest investment market, Uluwatu, right now. So they are running at 80 to 90% occupancy, and they're commanding globally competitive daily rates of between 200 and 270 euros a night. Further, what drives ROI is really this year-round appeal. Bali is the only short-term rental market with 2 high seasons globally. We have the December to January Australian summer season, European winter, and then we have June to August, which is obviously European summer, Australian winter. So in total, this is 80 peak days. This is the short-term rental market with the most peak days globally. Why? Because we have a lot of different ethnic diasporas coming to visit. We have Australia, obviously, that's 25% of the tourists. The next 8% China, the next 8% is India. And then we go into the long tail of Europe, right? So it's like a lot of people visiting from different cultural backgrounds. Further to that, the low cost of entry, it's like you pay about 15 to 20% of what you would pay for a comparable property in Europe. So you're getting globally competitive nightly rates, but you're paying a low cost of entry, and that obviously results in very high rental yields compared to the rest of the world.
So we've talked a lot about, let's say, macro tailwinds and the big themes that are impacting Bali positively. But to kind of anchor this in some data, a lot of experienced property investors would say that land prices are always where the value is, and that this is a great proxy for kind of value and growth. Now, if we just take a case study of Bali's probably top 6 sub-markets over the last 3 years, we see that land prices on both a freehold and leasehold basis have appreciated annually by anywhere from 20 to 45%, which is very, very significant. This is a great proxy for the kind of value growth we're seeing in the market overall, and a great marker for it. Beyond this, I think, we at PARADYSE have a thesis that a lot of people who are in Bali right now are sort of working in this market share. But we particularly feel that Bali just gets more attractive from here. We think it has an opportunity to cement a permanent position for itself on the world stage. And this is for a few reasons. If we just go through these points, firstly, Asian wealth accumulation is a huge one. So, we have a lot of tourists coming from the Western Hemisphere, from Australia, etc. But on top of this, Asia will generate 30% of all new wealth by 2028 and add 50 million new millionaires. Now, Bali is obviously very well positioned to cater to that emerging base of wealth. Second, we have what I'd call global lifestyle capital migration. So Marius has already touched on this, but places like the EU, especially now places like the Middle East, the geopolitical situation, people are either reassessing their economic situation, looking for new investments, or even in smaller numbers, actually looking to move on a permanent or temporary basis to friendlier shores. Bali's poised to benefit from this. Permanent remote work, Marius has also touched on, but there are a lot of high earners that are living more and more flexibly than ever before. And Bali has really cemented itself as a perfect place for this. Would you rather be earning a high salary as a tech founder or employee in San Francisco, where your rent is high and the infrastructure is crumbling, or in Bali, where you have a wealth of gyms, beach clubs, and sort of, holiday options catering to you? A lot of people are making that choice. Geopolitical safe haven. With a lot of things happening in the world right now, this part of the world feels relatively safe compared to what's happening elsewhere. Supply constraint is physical. So I think this is kind of an important one. Bali is a small island, and especially in the popular areas, there really is a cap on how much space is available. So this creates sort of natural upward pressure on pricing and on sort of demand. Lastly, the Indonesian Macro Foundation. Easy to forget this, but Indonesia is the 4th most populous country in the world. Really strong GDP growth of over 5% and a huge and growing middle class. So you're going to see this group of people participating more and more economically in Bali's tourism as consumers. I'll touch on this briefly. Underpinning this, we do see real change in infrastructure. So over 20 billion of new projects committed and in active execution. Highlighting a couple, there is a subway system being built from the airport out past Seminyak, Canggu to Pereiranan, Sese, and Cemagi. And further, this may also extend to Uluwatu in the future. The project is approved and some works have already started. There's a second international airport being built in the north. As Marius already mentioned, this will drastically increase the total tourism capacity to around 30 million a year, which is almost double the total now. And the Indonesian government is overall really investing in tourism capacity. We also have new toll roads and a special economic zone in Sanur, which is attracting businesses like the Mayo Clinic from the US.
Great. So we want to just quickly pause here and see if there's any questions that came up. Manfred, you had a question about over tourism. If anybody else has any questions, now is a good time to type them, then we can field them here. If not, we can kind of tackle them at the end of the next section.
Yeah. So I'll read Manfred's question. Do you see any risk in having too many tourists arriving? Can Bali cover this capacity, e.g. trash issues? Yeah, I mean, it's a great question, Manfred. First of all, it's important to remember that even though Bali feels like it's booming now, I mean, tourism is, let's say, 20% above its sort of peak pre-COVID. There was a dip there. So the infrastructure is already in place and it is actually improving a lot. Certainly, there is some risk that infrastructure just doesn't quite keep up, that these things aren't sort of neck and neck. But at the same time, I think this is kind of a naturally smoothing out thing. The government is taking conscious decisions to try and spread tourists out, for example, by building the second airport in the north, by putting infrastructure in place in advance. This is kind of going to create a bit of a smoothing effect. Look, there's always risk, but I think there will always be a market. And certainly when you're in Bali, especially in the quieter months, it feels like it can absolutely absorb this.
Great. Michaela, you asked about the PTPMA. Actually, this is part of the next section, so I will just maybe wait until we're done with the legal part here, and then we can see if the question still persists. All right. So the next section, the next 5 minutes, we want to spend about on how to own securely in Bali. What are the legal requirements? How do you actually own anything in Bali? And then in about 5 to 7 minutes, we want to also propose some options on how you can actually get started investing in Bali.
Right. So when it comes to the legals, obviously we get asked this a lot. A lot of people have not invested in Indonesia or maybe in a foreign country before. It seems a little complicated and people are very interested in sort of the structures. One thing we get asked about a lot is land titles. So one thing to kind of highlight up front, as a lot of you may already be aware, typically in Western countries, people are used to holding freehold property. So that's basically an allodial enduring right over the property forever. Now, in a lot of Asian countries, this is not directly accessible to foreigners. But what we do have is two other types of title. One is leasehold, which is the most common for foreigners. And I'll go back to that in a second. The second is what we call HGB, and that I would call freehold adjacent. We do call it freehold. It is a purchase of a freehold property, but something specific changes in the title when it is bought by a foreigner. So going back to leasehold, this is kind of the most common option for foreign investors. A lot of people have been doing this in Bali for many years. A lot of Australians have been doing it for many years, and now increasingly Europeans and Americans. This can be any kind of term. This could be 2 years, 5 years. It could be up to 50 or 60 years. The most common term we see is 25 to 30 years. So that's about the market standard. And you're actually renting from an Indonesian landowner. However, this is a very secure form of title. So firstly, you cannot be removed from the land. You have an enduring right to use it, to derive economic benefit from it. It can be inherited by your heirs, and it can be sold. On top of this, there's almost always an extension right on the initial lease term built into the contract. This can be done in one of a few ways. It could be at the market price, or it could be at a fixed price. It is fully legal and enforceable under the Indonesian law, and there's very good case law around that. And it's the most affordable option here. It is cheaper than freehold, which is why it also amplifies your rental yield. So you're looking at typically a 10 to 15% rental yield, something which may be counterintuitive to those of you who are more financially sort of oriented is, even though it's a leasehold, often you see capital appreciation in the property. And that's because on a 30-year lease, your lease is depreciating at 3% a year, but your capital appreciation may be 7 or 10% a year on the land price. One important thing to note here is if you extend a lease on a leasehold property, you'll only be paying for the land, not for the buildings, the furniture, the fixtures, etc. So typically to double the term of a lease will only increase the cost of a property by, let's say, 30 to 35%. The second type of title is HGB. We call that freehold. Technically, it's freehold adjacent. So this is when a freehold property is actually purchased by any kind of company. So that's a foreign-owned company in Indonesia or an Indonesian company. It converts from freehold into what's called HGB. So the government now holds the ultimate title of the land in a trust, and they give what's basically an indefinite extendable lease to the buyer. So you initially get a 30-year term, but you can keep extending this every 30 years for a small fee indefinitely. Anytime you sell it back to an Indonesian citizen, it will become freehold again, which means it holds its value as if it's freehold. It's obviously very secure, enables best-in-class structuring and optionality. It is significantly more expensive than leasehold. So typically a property in this category would be 20 to 40% higher. Obviously, it's a better legacy product. Sort of one thing to note here is that capital yields here, or rather rental yields here, are a little bit lower, so more in the 6 to 10% range, because the initial price is a little bit higher. Obviously, you get a little bit more capital appreciation here too. So this is how titles work in Indonesia, and we will move on to PTPMA structure, which answers Michela's question. So there are typically two ways you can structure a purchase and a holding of a property in Indonesia. One is sort of a direct path. This is only applicable to leasehold. So you can, in your personal name, buy a leasehold directly and hold that leasehold. The other is to do it through a company. So what's called a PTPMA. You set up an Indonesian company. PTPMA means a foreign-owned company. So you and other foreigners can own 100% of that company, and then that company actually holds the title. So if we look at both, direct is only possible with leasehold, not with HGB or freehold. So if you want to do HGB or freehold, it must be done through a company. It is, so the direct path is simpler and cheaper to set up and quicker. However, it's not quite as legally robust. If you don't live in the country and you're a non-resident, the way the rule of law applies to you as a resident, as a non-resident, will not be as strong as the way it applies to a PTPMA, which is a resident company. And it may not give you the same kind of tax optimization potential. On the PTPMA structure, this works for either leasehold or for a freehold or HGB purchase. Effectively, you just set up the company, and the company then buys the title of the property and its assets, buildings, etc. Now, this gives some options in terms of tax optimization, both for the purchase as well as for ongoing profits and dividends. It could also allow you to tax optimize and exit from the property by selling your shares rather than the property. One thing that's important to note, of course, it costs a little bit more to set up and to administer. You need to do taxes, filings, etc. on an annual basis. This is also an option to potentially get a long-term resident visa if that's something you're looking to do.
Great. I just want to also note that Marcus has spent a lot of time digging into this. So if you guys are interested and want sort of a deep dive with him on this, he's very happy to give advice on this. Great. Just another stop for our next poll. So we're curious, what has been the biggest blocker to investing in Bali for you guys? First couple of votes are coming in. Too much capital required, definitely one of the highest ones. Legal structure, unsure about returns. Anyone else? Okay. Yep. All right. Okay, then let's maybe close the poll. So yeah, it seems that the capital requirement is indeed one of the blockers, and that's great because this is what we're here to address today with the co-ownership proposition that we offer. The second highest was the legal and the ownership structure. We hope it was clear enough. If not, book a deep dive session with us. We can go a lot deeper than what we can cover in this webinar in a follow-up call. Managing remotely, yes, understood. It's painful. It's a hassle. We'll touch upon how we alleviate that pain for owners and make it entirely passive. And then unsure about returns, not the next, but the chapter after in about 5 to 10 minutes speaks entirely about return potentials and what is a realistic ROI expectation. Great. Then let's...
Should we just answer a couple of the questions as well?
Yeah. Let's see. Okay, so Michela, yeah, we hope this covered your question on the PTPMA. There's one question from John around the rate of inflation and the potential for cost of living increase.
Yeah. So look, I mean, headline inflation, I'm not sure. I think it's around 4 to 5%, which is high, but not that much higher than we've seen elsewhere in the world in the last years. Definitely. I mean, if you're looking to live here permanently, I would say the cost of living increases could definitely be a concern as more and more foreigners come here. It becomes more attractive. Demand goes up and prices go up. To be fair, we have seen prices relatively stable over the last 5 to 6 years. Ultimately, a lot of tourists here, a lot of people who may be looking for a hybrid lifestyle, having a holiday home or spending a couple of months here, still have international dollars, and that certainly go a long way in Bali. Manfred, another blocker is scam protection. Since I'm not a local, very good, Manfred. Well, hopefully you've sort of been through the process already with us, and that is alleviated. We do have a fairly robust legal process. So everyone puts down a deposit. That deposit is fully refundable. Sort of detailed contracts outlining what needs to happen to call additional capital, all subject to due diligence. So we do structure this very well compared to most people on the island in Bali. Reasing, do I pay 5% property transfer tax when investing in leasehold model? So you won't pay when purchasing. The seller always pays. When you exit, so when you actually sell, if you own a property by yourself, you would have to pay this tax when selling. However, there are ways to mitigate it. For example, you can hold the property under a PTPMA, sell your shares in the PTPMA. There will also be some tax payable, but there are some other methods we can discuss to kind of mitigate that. So yeah.
Okay, great. Then let's move forward. Next, we want to discuss what is the best way to own for you and how to not pay more than you'll actually use. So we want to explain the traditional methods of ownership and also the new method of co-ownership, which we based PARADYSE Homes on. And then in 10 minutes time, we'll make this very tangible by showing the exact economics of co-ownership. All right.
So 3 ways that PARADYSE can advise you on kind of routes to ownership in Bali. So, the first 2, full ownership of leasehold or freehold property, are something which is broadly offered in the market, but we think we go a little bit deeper. The third, which is co-ownership of either leasehold or freehold, is something we'll introduce to you today, and PARADYSE pioneered this in Bali and is one of the first people to do this in Asia. So I'll kind of go through each of these sequentially. So if you're looking to buy a full property, so maybe a villa or an apartment on a leasehold basis, you'll realistically need minimum of 100,000 euros, let's say, to get into the market. Comfortably, maybe more like 150, closer to 200,000 US or a little less. In the leasehold category is where you'll get your best cash yields. So that means rental returns from either short-term or long-term, like monthly or annual rentals. They typically fall within the sort of 10 to 17% range. Your target IRR, so your annualized investment return on a long-term basis, will be slightly higher, up to 20 or 21%, because you also typically are putting your rates up every year on a fixed capital base. There are a couple of strategies you can play here with leaseholds. Typically you will get a property with a 30-year lease or maybe a 25-year lease up front. You may get something longer. Now, you can hold the lease till the end of the term and simply then run it out for as much income as possible. You can extend your lease and continue extending, so you can have 60, 90 years in total where you continue to make income. Or what we see some people do is after 3, 4, 5 years, when they've made good returns and the market has gone up, they resell the property, they bank the capital gain as well as all the rental income they've made to date. Now, important considerations here. One is obviously being conscious of having extension rights in the upfront lease and thinking about the strategy you want to have there. The second option is obviously full ownership on a freehold, so HGB, which is freehold adjacent basis. So it becomes HGB if a foreign company buys a freehold, basically, as mentioned in the earlier slide. Cash yields here from rentals are going to be slightly lower, sort of in the 6 to 10, 11% range, because you're paying slightly more for the property. Your long-term IRRs are still going to be very strong and can go a little bit higher because you also have great capital appreciation built in. This is obviously the strongest sort of gold standard title. If you're looking to invest more, this is the place to do it. And indeed, it's going to cost you more. So typically, you'll need at least 350,000 euros to get into a decent property. That could go up to 1 million or more for a really special asset. And it does give some good options in terms of sort of tax structuring and so forth. The last is co-ownerships. This is something that PARADYSE has pioneered. As I mentioned, you can get into the market for a much lower price, much more affordable entry point doing this. So shares start from as little as 30,000 US. So that's sort of 25 to 26,000 euros. You can expect similar cash yields to leasehold, sort of 10 to 13, 15%, and a long-term IRR of 15 to 20%. Now, obviously, this is a great option to come in with a lower investment. Even if you want to spend a little more, you could build up a portfolio of maybe 2 or 3 different shares or properties, which gives you a little bit of a hedge against different areas, different asset types, etc. Important considerations are obviously, how do I own a property with other people? And PARADYSE has a great governance framework for that, which we'll take you through in a little while.
Great. Maybe just to take a step back and start explaining the background of the co-ownership model. So Marcus and I are both real estate developers here in Bali. We've built and sold over 20 villas. Every time we spoke to customers, we came up on 3 distinct problems. So number one is affordability. Like we already saw that in the poll. The upfront capital requirement to buy and own a full villa here in Bali has just been increasing year on year for the past 10 years. So right now we're looking at 250, 300K US, so like about 210 to 230K euros for a 2-bedroom villa as an entry price, and there's no financing for foreign investors. So it's entirely equity financed. If you're buying a finished villa, basically you need to have the money one shot ready. So that rules out villa ownership for a large portion of the population. And then we also, once we own the property, we have to pay between 10 and 15, even 20 on larger property K running costs, which also has to be fielded by a single owner. Then there's the complexity and the hassle of owning. Some of you have highlighted that as well in the poll. So how do you actually legally make sure that you really own the villa? What do you need to look out for? How do I do due diligence? How do I settle my tax matters? And once you get past that hurdle and you do the transaction, how do you then manage it from abroad without getting annoyed by guests checking in and looking for teaspoons at 2 a.m.? So managing from abroad is another big hassle that we kept hearing about. Lastly, owners who buy this for lifestyle purposes, they buy 12 months of use, but they come for 2 weeks, right? So villas end up underutilized if it's a pure lifestyle asset. They also feel locked into one location and feel like they need to holiday there over and over to really make it work. And then there's the difficulty of reselling an asset that costs 300K plus. And so with the set of problems, we turn to co-ownership. Co-ownership is already established for second homes in the US, and it's $1 billion market there. We actually have investment from the European leader of co-ownership that did over $100 million worth in real estate transactions in Europe this way. We are the first ones, like Marcus said, that brought it to Bali. And so the way co-ownership works is that instead of buying the whole villa, we split a villa into 8 shares, which means that you can own from as little as $25,000. This is a notarized transaction, meaning that you own shares in a company that holds the legal title. It has nothing to do with a timeshare. Timeshare is basically usage rights for a hotel complex. You don't really earn anything, and you're typically also tied to a specific week. With us, you own real equity in a company that holds the villa. You are entitled to all the profits that's based on your shareholding. And importantly, it's also a very flexible way to come here. You don't have to, you're not tied to a fixed week. We made the service of PARADYSE co-ownership hassle-free. So we handle everything: legal, tax, short-term rental management, maintenance, compliance. You just arrive and relax, or if you're investing purely for investment purposes, you just wait for your passive income to arrive. And then we made this very flexible as an investment. So one share comes with 44 nights per share. That's 6 weeks. Any unused nights, so you can use all your 6 weeks. That's fine for us. any unused nights will be rented out automatically for passive income by us. Lastly, should your needs change, there are multiple ways that you can make your share work for you. As we expand regions beyond Bali, you will be able to swap days with other co-owners. We call this the lifestyle passport. This would probably happen in late 2026, early 27, when we start looking at Thailand and Japan. So that's a very powerful proposition. So if you want some novelty, you can just trade with other co-owners who own properties in other places. If your needs change permanently, we can either swap your share permanently with someone else if they agree to that, or we help you with our resale marketplace. After 12 months, you are free to resell your share. We will help you appraise it, and we will either, first of all, offer it to the other co-owners. If they refuse, typically some co-owners, they like to spend more time there, or they think it's a great investment, so that could be the easiest way to do it. If they refuse, then we will relist it with, it just becomes a tile on our website with all the other listing tiles, and we will put marketing dollars and the sales team behind it. So how does it work in a bit more detail? Every villa is owned by between 2 and 8 co-owners with complementary usage wishes. So that could be maybe 4 investors, 2 families, 2 singles. All of them, families typically come more during peak periods because they are tied to school holidays. Singles come usually a bit more flexibly during off-peak periods, and the investors never intend to set foot in it. So that way we already reduce conflict for the same dates. This co-owner cohort, they share ownership, they utilize the same dream holiday home, and importantly, they share income and costs. Our homes are in prime locations. They have stylish interiors, high quality amenities, and are designed by world-class architects. And PARADYSE handles the 5-star service, the coordination between co-owners, so that co-owners don't have to move a finger to get their returns and or get their villa maintained. And we also do the value-oriented property management on your behalf. So how does it work so that 8 co-owners can actually peacefully own a villa together in a way that's fair for everyone? We've developed an algorithm that guarantees fair usage about 80% of your desired dates. Obviously, when you co-own with 8 others, you can't expect that 100% of the dates are available. And we do this in the following way. We categorize days into peak, standard, and off-peak days. Bali, as I mentioned in the beginning, is the place with, or the short-term rental market with the most peak days globally. So there are 80 peak days, which means that every co-owner gets 10 peak days. If you are investing purely for investment purposes, peak days are the most profitable days. There's the highest occupancy, typically between 80 and in Uluwatu, sometimes even 90%, means out of your 10 days, we will rent out 8 to 9 days. So you probably won't come during peak days. You might come during off-peak once to show your friends. But those days will be reserved for renting out. So if everybody else uses up all their peak days, but your 10 peak days are available to rent, again, we will rent out between 8 and 9 of those peak days every year. And then you're the only person who will get the profit share from the peak days pool. And that works the same for all the other categories. Conversely, if you're investing for lifestyle purposes and you want to come during peak season, you have 10 peak days. If you used up all your peak days, you cannot come during peak season anymore. So that way we guarantee fair usage between all the co-owners, because every co-owner gets the same amount of nights in each of these categories. And then there are some rules around how to actually reserve to make it more fair. One important rule is that you can only book 1 peak holiday per year. Peak holidays are Christmas, Easter, and so forth, New Year's. So if you book Christmas, for example, you cannot book another peak holiday that same year, and you cannot book Christmas for the 2 consecutive years. But you can book another peak holiday next year. And that way we rotate the peak holidays between co-owners. This is a very flexible way to book. You can book 24 months, up to 24 months in advance. So if you want to come during a specific period, you're encouraged to book early. But it also allows for flexibility and sort of last-minute bookings. You can book from 2 days. Obviously subject to availability, because 6 months into the future, we open up the calendar also for Airbnb and the other travel agencies. Great. I'll stop here and see maybe if we have some questions so far on usage and co-ownership. Okay, great. Then we did a good job at explaining it. I'll let Marcus guide everyone through the financials and returns. We will first discuss the different areas, because the different areas of Bali, they suit different investor profiles. And I think you need to be clear when you choose the area, what is it that you're looking for? And then we will walk through one very concrete example.
Thanks, Marius. Yeah, so just to touch on, I guess, the sub-markets within Bali, this is very important. The density, Bali is not a huge island, but it's big enough. But the most densely populated tourist areas tend to be in the south and the east. So you've kind of got 4 key areas, I would say, broadly speaking. And we specialize in properties in those areas where you have the most tourist demand, the most buyers, etc. And these areas can sort of vary quite significantly in terms of pricing and return profiles, as well as what they offer to tourists. So in the top left, you have Seminyak and Canggu. These are kind of an extension of Kuta, which really exploded in the 80s, and it's grown up from there. Canggu has really emerged in the last 10 years as the latest hotspot. And now we see a continuation of that corridor up to Sese and beyond. Now, this is kind of the most established and in-demand region. It still just does get the majority of the tourists. It would have the highest concentration of villas, food and beverage, and lifestyle amenities, and a mix of short and long-term stays. It is the most developed, but also most populated, and to some extent slightly more saturated area in Bali when it comes to tourism. The second on the top right is Ubud. So this is kind of the traditional Bali that everyone has in their minds. This is the cultural sort of heart of Bali. You have the palaces in Ubud, you have the temples, you have jungles, rice terraces, waterfalls, etc. Really a tropical island paradise. A lot of long-term residents, a lot of tourists as well. It really is a beacon, really a wellness hub too. So a lot of people come for yoga, for spirituality, and for different wellness things. As a sort of, let's say, investment market for property, it is pretty stable. It tends to be a little bit cheaper than Canggu and other areas. Also a little more mature, but still very good on a return basis. In the bottom right, you have Sanur, which is a very specific kind of place, very good infrastructure. It has a lot of long-term residents, and it tends to be popular with families as well as retirees from Australia and some other people. It does have a really nice vibe, but at the end of the day, it has less short-term renters and less short-term property rentals. So it's not an area which is really at the heart of this as a business model. Lastly, you have Uluwatu, which is to the south of the airport in Bali. So this is a small peninsula. It's always been very famous for its surf breaks, and it has some incredible surf breaks and beautiful white sand beaches, plus very spectacular sort of cliffs around the peninsula. However, it didn't really take off for tourism until a few years ago. Now it is really emerging as one of the hottest locations in Bali with some of the best returns, and we'll go through that a little bit deeper in a minute. So to kind of carry on the last point, as I mentioned, Uluwatu has really emerged as a top rental market and property return market in Bali. As we can see in the chart on the left, Uluwatu has some of the best average rental income. So ROI, return on investment, in Bali, just under 14% on average, compared to Canggu around 12%. So it's a good margin here. Why is Uluwatu doing such good yield? I mean, I mentioned to you that Canggu and Seminyak are really the most developed tourist markets. However, in Uluwatu, you have firstly very limited villa supply due to a couple of things. This area emerged later, and there's also physical constraint to supply. This is a peninsula. Land is limited, and a lot of the land in the middle is actually green zones, so you can't build on this legally. There's been a huge surge in Uluwatu demand post-COVID. So a lot of people have discovered Uluwatu, the white sand beaches, the beauty, restaurants, lifestyle options have really started emerging. The clifftop restaurants and beach clubs are something very special. So when you combine all of this together, you have a structural undersupply of villas, but a boom in how many people are coming. obviously you put upward pressure on nightly rates and occupancies, and hence you're seeing some of the best returns in the market. So going into the development, we wanted to share with you a little bit more about today, sort of as a case study really on what we can do in fractional. Meet the 9. This is our latest development in Bali's hottest sub-market. So the 9 is in Uluwatu, which I've just been speaking about, and it's in a micro market in Uluwatu known as Bingin. Bingin is the most attractive property market in Uluwatu. It has a lot of new development that's happened, very attractive cafes, dining, restaurants, gyms, etc. Proximity within 5 to 6 minutes to 2 or more white sand beaches, which are also surf beaches. So it's a very special address. And what makes the 9 so special? So it's a very small boutique villa complex, 9 properties, highest return address in Uluwatu and in Bali, as we've said. Very differentiated architecture, specifically designed to drive short-term rental occupancy, 5 to 10 minutes drive from most of the key attractions in Uluwatu, as well as a superior build quality. So often in Bali, build quality is not going to be as high as Europe, quite honestly. But we work with a German contractor, European structural engineers, and best-in-class warranties, which means 10 years warranty on structure and 5 years on waterproofing, which is the best you'll get in the market.
So what we want to showcase today, we have a mix of 2 bedrooms, 1 bedroom and a studio. There are 9 units in the 9, 5 of them are already sold. We just opened up the last 1 bedroom for co-ownership, and we already sold 2 shares. So remember that we have 8 shares, so there's 6 shares left now. Our 1 bedroom has 1.5 bathrooms. There's a guest bathroom downstairs, 1 full bathroom upstairs. It's a 106 square meter plot, 74 square meter build, a nice terrace with ocean views. And it's a 29 years leasehold that's extendable by 30 years. If you look at the design of the bedroom, of the 1 bedrooms, you see that it's a semi-detached house, and it is a very contemporary design choice. Why? Because there's a sea of white Mediterranean contemporary villas in Uluwatu right now, and on Airbnb, when you're choosing a villa, you're going to choose by location, but there are still lots of similar looking villas in our location, and so we chose a niche to really stand out. So what we've chosen is a design style that's called modern tropical. We use concrete, dark wood tones, glass to really let the greenery shine against this backdrop and create a very luxurious feel. What's also typical of the modern tropical design is this cantilevered design style, where you can see these large overhangs of the balcony and the roof, which provide natural shade and cooling. Each villa comes with a private pool, garden, and ocean views from the first floor balcony. And I'll let Saumya play a video for you guys to experience the villa in a bit more detail.
And this is the 9, our new project in Bingin, Uluwatu. It's a collection of just 9 homes designed to feel refined, calm, and highly livable. From the start, we wanted to build something more distinctive than the typical villa in Bali, because in a sea of 1,000 white villas with Mediterranean arches on Airbnb, standing out really matters. The 9 is designed to sit in its own niche, both visually and commercially. Our 1-bedroom villas all have ocean view balconies, skylights, and floor-to-ceiling windows on every level, so they feel incredibly bright and premium. Our 2 bedrooms have a large living space with indoor planting, a home cinema with a retractable screen, and an office that can also work as a half bedroom, which makes them especially attractive for longer stays and remote workers. And importantly, this isn't our first time doing this. Together, we've built and sold 20 villas in Bali to date. One of our recent sold-out projects, Lunara and
All right, it seems that we had some technical issues towards the end. We were going to show our recent project. Happy to do that offline next time. So yeah, this is the 9, a beautiful contemporary set of villas that we built, and we want to walk you guys through the economics next.
Yeah, so we want to run you through the numbers. In PARADYSE, we always work closely with data. So we've assessed the area and looked at comparable villas in the area. So all of the above are within a very short distance of the 9. You see 3 examples of 1-bedroom villas, which are each making 80 to 100K USD a year of gross revenue, with occupancies well above 85% and daily rates of sort of $240 plus in this area. So if you buy 1 share in the 9, effectively, so in a co-ownership model, this is what the economics broadly look like. So the average daily rate we're estimating here is 150 euros, which, as you would see, is lower than the other benchmarks in the area. Occupancy rate at 82%, also on the conservative side, lower than the other villas in the area. Over a basis of 44 nights, this gives you gross rental income around 5,500. Now, obviously, there are some expenses that are removed from this. This includes leasing and marketing costs, which are billed at the market standard. Operating expenses, which includes everything required to give you or your guests a 5-star experience at the property. So this means housekeeping, linen changes, pool and garden, villa management, drinking water, high-speed Wi-Fi, utilities, etc. Financial and governance, we do your tax returns, your regulatory filings. The properties are also insured. A repairs and maintenance sinking fund, which is not a fee. It's actually an amount which is held within the company in reserve to fund expenses that may come up over time. We do this to be conservative. A lot of developers just pretend that this won't happen, but we specifically earmark money for it. PARADYSE charges some small fees. Apart from that, everything is charged transparently. This leaves you with an operating income of a bit over 3,000 euros on your investment of 26,500. That's a 12% gross ROI or an 8-year payback period. Depending on your tax residency, typically for an EU resident, there will be a withholding tax of 15% on the Indonesian side, which, it has to be noted, you can claim as a tax credit, typically in your tax return at home, resulting in an annual net payout of around 2,700 euros on your investment of 26,000. So just a little bit on how we actually run these co-ownership structures. So we've touched on it before, but what we actually do is similar to if you were buying your own property, we would advise you to purchase or set up a PTPMA to do that. We set up a PTPMA, so that's a foreign-owned Indonesian company, in order to buy the villa. The co-owners each hold their pro rata share in that company. So if you buy 1 share, you'll hold 12.5%. If you buy 2 shares, you'll hold 25% of this company. As an owner in this company, and this company owns the property, you have a direct economic benefit and economic interest in the property itself. But this is the most flexible way to do things. As we mentioned earlier, PTPMAs tend to afford you stronger legal rights. It also gives us a little bit more freedom for you to buy and sell your shares, for us to manage the property on your behalf, and to resolve any tensions or any things that may come up between the various co-owners. So basically, you own your shares in the company. PARADYSE manages the company, submits your tax returns, does all your finances, manages the villa, and also oversees the overall leasing and management. A few more things to say about the property itself. So the warranties we've touched on, 10 years guarantee on structure and 5 years on waterproofing, is excellent in Bali versus kind of a standard of maybe 1 year on structure. German-led contractor. Under co-ownership, all our villas are fully insured by an international insurer. You also have Airbnb insurance and our repairs and maintenance sinking fund. So these models are thought through very comprehensively. There are no hidden fees. The purchase price includes the due diligence, the notary, furnishings, turnkey, etc. And in terms of exit, we can also advise you on this. You obviously have the option to resell your share in the future.
Great. So we're getting to the last poll of today. We're curious which ownership type based on what you've learned today aligns best with your needs. Okay. All right, we'll wait maybe another couple of seconds. Okay, seems like fractional ownership is interesting to 2/3 of you, and 1/3 of you wants to learn more. As we said, we will send around a link at the end to book a deep dive call with us. We will get in touch with you to discuss anything you want in more detail there. Maybe we'll also use the time now to field some last questions. So, Michaela, yes, the replay would be useful. Absolutely. We will send this around after the webinar completes. Is this net, Ralph, you asked, is this net? So without all costs, let me just jump back to the slide so that we can take a look at it again. I assume you're referring to the operating income and the net payout. Yes, that is net, what you will get paid out from PARADYSE at the end of the year. So in this case, on your 26K euro investment, 2.7K euro net payout.
John, any 2-bed options? Yes, John, we also do have a 2-bedroom in the 9. So there are a couple of fractions left in the fractional villa. And there's also 1 villa available for full purchase, which we're speaking to a few people about right now.
Okay. If there are no other questions, we would love to use the last 3 minutes to introduce actually ourselves to you a little bit more in detail. So Marcus and I have sold over 25 villas in Bali across 3 projects. We returned $1.5 million in real estate profits to our investors so far. We are on the ground in Bali since 5 years and have experience building real estate here. We're also third-time founders of VC-backed companies. Importantly, PARADYSE is not just 2 guys with a laptop here. We have international backing, as you can see on the right-hand side. Prior to doing PARADYSE, Marcus and I worked at leading strategy consulting firms, and we're backed by Southeast Asian VCs and angel networks and some very big founders in the prop tech realm. What we can support you with is we can support you really end to end. I mean, we do development. If custom development is something that you're interested in, we can help with that. We are always equity principals in our own development. We're not just some brokers trying to shill villas. We care about the quality of the stuff that we put out into the world. We advise like a broker. We operate like a broker on advice and advise on selling. We conduct our own market research. We put out thought leadership pieces. We do anything from sourcing to due diligence to deal execution. Our fractional offering enables you to own from as little as $25,000. Same asset, 1/8 of the capital commitment. And we manage the villas also day to day so that you have one throat to choke if something goes wrong. Great. So just to touch on next steps. So if this sounded interesting to you and you want to learn more, the next step would be to book a consultation with either Marcus or myself. And we will come up with a tailored investment solution for your needs. Once you decide to go ahead, there's a 20% down payment. We're just talking about the fractional path right now. There's a 20% down payment once we sign the agreements. So for the 9 1-bedroom, that would be 5,300 euros. Once the due diligence is complete, and we completed a couple of due diligences already on the 9, so it will be greenlit in about 4 to 6 weeks. So 80% is due once the due diligence completes. That's 21,200 euros. Is the math correct? Not sure. I think it's slightly less than that. Then the construction for the 9 will finish by December 2026, and we will take over management for this villa, and then you can start staying and earning there, as we explained in the co-ownership part of today's webinar. Once 12 months pass, you can resell your share anytime, and we will help reappraise it and sell it via the PARADYSE platform. We also have full ownership options available if that's of interest. If you want to get in touch with us, we will, if you can either copy this URL into your browser, or Saumya will maybe send around the, actually I'll just do it myself. We'll send around in the Q&A section the URL to get in touch with us. So if you just register interest there, then we know that you want to book a follow-up call with us. oops, sorry, this was the wrong one. This is the EU link. Here we go. And then we'll get in touch with you in the next few days. It's been really a pleasure to chat with you all, to explain the market a bit more, and we hope that we can help you find your dream holiday home here in Bali. Thank you so much.
Thanks so much.